Good morning out there, traders. It is February 13th, 2024. Welcome to the Apteros Daily Market Insight for the ES today. Let's start with our recap, and then we'll update our plan and levels for today. So just taking a quick look at our recap here from yesterday, we essentially had a plan around this particular line in the sand that was bullish in nature. So scenario one was that we held up above that. Scenario two is that we break down below it. Now, in the actual DMI, I had mentioned that this particular neutral reference was going to be tricky for us in the morning, kind of setting the pace whether or not we head up to a target area or we head back down and look for that pullback into the line in the sand. You can see we essentially got that early shot right out of the open into our target area here, and that pretty much ended the ideas behind scenario one because we hit our stretch target up into this zone here. We did not hold above, even though it looked like we were going to in this particular section right here. So just taking a look at that area for any type of continuation, I mean, this was pretty much your best opportunity for any type of continuation. It just didn't pan out, didn't fizzle out, so we didn't get into that trending state to the upside. And of course, the collapse coming in after that. And there really wasn't much else to do along with scenario one. So if you were trading scenario one, kind of getting it early out into the open or early part of the session for the cash session for the ES into the target area was the trade. Then possible continuations after we kind of stabilized up here for a little while were possible here, but you would have compromised the acceptance picture around this particular reference. So for example, you're looking at this leg of rhythm here. That acceptance picture isn't quite there yet. We did hold above it for a little bit of time, which helps whenever it comes to acceptance. We look at time or rhythm. And then this particular spot here, a little bit of a compromise in terms of acceptance, trying to get long there. So not a true opportunity with the acceptance picture to the upside, but a compromise opportunity for any type of continuation that just didn't pan out. And then from there wasn't anything to do for us really because we were in essentially pullback mode, right? Coming back into our line in the sand, waiting for scenario one to play out. And there just weren't any more opportunities for the session. So early kind of one and done situation here with an actual opportunity from the DMI, opportunity with scenario one. From there, no real opportunities to continue on with scenario one for the remainder of the session. Now we're taking a look at the ES, and we are into some dissonance. We are finally seeing a dissonant market that isn't just bullish across the board here. So we do have a little bit of a tricky situation today with the DMI in terms of where we're sitting overall in the context of the ES. We do have a bigger line in the sand here based on our higher time frame. So this is our main line in the sand really for the session, with scenario one being bullish hold up above that, scenario two being a breakdown below that into this neutral destination area here. So the way this kind of pans out across the board is these time frames here at this line in the sand, this bearish line in the sand, have switched, and they're now holding to the bearish side of things. And that is the continuation from the CPI number possibly coming down to test our bullish higher time frame conditions, right? So that's really where we're standing. This is the dissonance between the two sets of time frames that we have. So whenever we have this type of environment, caution is best. The CPI number did basically sell this market off into a bullish area. So we really have to pay attention to this whole entire zone here for acceptance and for a breakdown to get on board with any more bearish opportunities to the downside. So don't just look at this market and think, oh, well, this CPI number, this is going to continue straight down and everything's going to collapse. We do have to clear out some major bullish areas before we start to get on board with a completely bearish context. Right now, it's dissonant. We have some lower time frames here shifting to the bearish side of things. We have some upper time frames that are still bullish that need to be tested. So in between here, we're kind of back and forth in that no man's land between bearish and bullishness. Now, of course, once we get down into here, how does this all rank into still? What's our priority? Well, that, I've kind of put out there for you in the scenarios. This is our main line in the sand for the early part of the session. Scenario one is that the what is picture holds there. We see a hold and inflection up into these upper destinations or upper targets. If it breaks down, then we get a quick, opportunity to head down into this neutral area here for a target or a destination. And then there is, some neutral references below there that we can look at for stretch targets into the session if the market continues to sell off from here. So that's the overall game plan for today's DMI. I did wait until the CPI number, was active and in the market a little bit here just to see how this was going to pan out. But this weakness in the CPI number was showing up on our time frames pretty much right in here. We started to see a condition shift on some of our lower time frames here, pushing this market even further to the downside once it held. So now we're in that back and forth section on the ES. So caution is advised. Pay attention to this bullish line in the sand here. This is really going to be an important area for us overall in the ES, because if we do hold it up, we're still looking at kind of maybe a bullish opportunity, a bullish market still, and we can pay attention to that as the coming days kind of, evolve. But we will probably be in a distant market if this line in the sand holds up for a day or two. If it doesn't hold up and we start to see that shift to the downside, then the market becomes a lot more bearish and we start to see things kind of opening up a little bit more for the bearish side of things, especially if we start to hold below this neutral reference and continue to that downside. All right, so that's the overall landscape for today. Trade well out there. Make sure that you mind your risk, and let's get after it.